Hello, and welcome to Ask the Mortgage Guides Live. My name is Sarah Patnode, and I am so excited to have you join us tonight. Hello, everyone. Hello. We are going to be talking all about the realities of self employed borrowers tonight. And guess what? This is the first in the series. So we'll talk about that a little bit more as we get into the program tonight. But let me tell you what a lot of folks that are getting on, they're seeing that the live stream is going, might not know who you guys are. So let's take a moment for the viewers and the listeners, right, that'll be listening to our brand new Ask the Mortgage Guys podcast out there. Let's have you guys share a little bit about yourself. So I'm going to go backstage and let you guys introduce yourself, and I'll be back in a minute.
Hello, everyone. I'm Nikki Erickson, co-owner of Kevnick Mortgage. I'm super excited to be here with Kelly to talk about self-employed borrowers and the impacts of the last year that have had on these business owners and how we can help you navigate through the mortgage process as a self-employed borrower.
And I am Kelly Overgard, mortgage loan officer, and I head up the Prior Lake, Minnesota branch. And we're actually in Prior Lake, Minnesota tonight. So you are sitting in our conference room with us. We're excited to have you actually in the house. And we're going to talk about mortgages for business owners. And we think it's really important to actually understand, what is the definition of a business owner? The mortgage industry, whether or not you're getting a Fannie Mae loan, FHA loan, VA loan, most of the time they look at the business owner the same way.
Yeah.
So an actual definition of a business owner can be a sole proprietor, somebody that is filing a Schedule C on their personal tax return. It could also be an S Corp that's filing an 1120S or a 1065 partnership. So those are the actual tax forms. But with the S Corp and the partnership, you're not actually considered self-employed until you own 25% or more of the business. If you own less than that, it's typically just done like any other W-2 employee.
Absolutely.
So, understanding what that is, I think helps. And then as we look at those different ones, we're going to talk about the different impacts that we've seen. And one of the ways, Nikki's going to kick that off, looking at what did we used to do compared to now.
Yeah, the
kind
big
of walk
question.
us through that. Yeah,
what's
absolutely.
the mystery here?
Yeah, so go ahead.
All right, so thanks so much. And we're so what I wanted to really start off with is how did we used to qualify self-employed borrowers? And with the economic impact that we have all experienced over the past year and a half, what has changed? What have Fannie Mae and Freddie Mac came out and said, you know what, this is what's important now. And we were just talking the other day, Kelly and I were, about how there have been some changes in the industry on how we qualify self-employed borrowers due to the COVID impact. But what we're thinking now is that this is actually starting to become the rule more than it is the exception. So Fannie and Freddie have put some temporary requirements in, or what they're calling temporary requirements in for qualifying self-employed borrowers, because they really need to get a look at what is the year-to-date impact for those self-employed borrowers? How is their business running during this time of economic impact? And how can we help them make sure that they qualify for that mortgage payment? And how can we help them make sure they're going to be able to make their payment? And so what we're seeing is that even though these are temporary guidelines, we're definitely seeing that these are going to become the norm. So here it goes. So prior to the economic impact, we used to be able to qualify self-employed borrowers on 1 to 2 years of business tax returns or personal tax returns if you're filing a Schedule C, and then also a year-to-date profit and loss. And that year-to-date profit and loss statement was just something that the business owner showed us, what income have you made so far this year? And what have your expenses been? And is that still considered a healthy business? Is it a growing business? And we would base the qualifying on what they actually filed with the IRS.
Yeah.
And that, depending on if they have been, how long they've been self-employed, would determine whether we use 1 year or 2 years of tax returns. And so Kelly and I are very used to qualifying self-employed borrowers on tax returns, understanding how to read those, understanding what it means from a mortgage qualification standpoint. Well, since the COVID impact, not only are we gathering those documents, but we're also depending on the clients to give us 3 months of business bank statements. So what that does for us is, if you think about the last 3 months of business that someone has gone through, it's going to give us a really good idea of income and expenses, just like the profit and loss statement would, but it's also going to validate the profit and loss statement that the clients are giving to us. And the reason for that is because we still want to make sure that their business is flowing, that their business is running, that they're having those incomes, that they aren't over expensing themselves, things like that. And so that's really important for us to be able to determine over those last 3 months. Now, that brings up a lot of questions from our clients. It really does. So it's like, okay, I have a seasonal business. I run a bed and breakfast. We're busy June, July, August, but we're not so busy December, January, and February. And that's very natural for a business like that. So how can we as the experts help you understand what that's going to look like? And how can we help the underwriter or the approval process understand, hey, this is a seasonal business. This is cyclical in nature. How can we grow or expand out what their income and expense situation is to make sure that we accommodate for seasonal, income, or we accommodate for all different types of self-employed borrowers. So whether your business is running, and you say, oh my gosh, the last 3 months, are you kidding me? That's like my slowest time of year. Or you can say, oh yeah, the last 3 months is my healthiest time of year. How can we help navigate through that? And so that's really important. So then the other question is, well, I'm a business owner, but I'm a Schedule C. I clean houses for a living and I commingle funds between personal and business. What am I going to do? And so we can also help you through that situation. So with commingling of funds, instead of using business bank statements, we do have options for using things like audited profit and loss statements. And what that means is it basically differentiates or separates out those business expenses from the personal ones, along with the income that's personal versus the income that's business, and helps us really get a good gauge on where your business is and what it's running. And so overall, for us, it's really important for us to understand, what is your business doing right now? What has it been doing for the past 3 months? And does that apply to the overall qualifications for you as a self-employed borrower? And that is now more important than it ever has been, because a lot of times what happens is, people have taken PPP funds, and we'll talk about that in a minute. Kelly's going to touch on that. A lot of times people have said, like they've had to take out different business loans. How does that impact your qualifying? And so we're very well versed. We've been, working with these new guidelines now for over a year and making sure that we understand them intimately and really making sure that self-employed borrower is well taken care of.
I think throughout what you were explaining, you did such a good job explaining the differences. And I kept hearing what is so true here at Kevnick Mortgage. It's helping you navigate, because it is different for every business owner. Looking at options, actually getting you in the right direction, pulling out the critical data. And one of the things that we do really well is we work with your partners. So we'll work directly with your CPA, your financial planner, whoever that might be, because we want you to focus on your business. The last thing we want you to do is take time away from your business to actually get qualified for this mortgage loan. So that's one of the things that we will do, because it is complicated. And we have been doing this a really, really long time.
I think between us, we have over 50 years of experience in this, in navigating self-employed borrowers and figuring out what to do from that standpoint.
We do. So we can definitely help you make it less complicated, help you through it. There's so many different scenarios. We're working with a handful of buyers right now that, like Nikki said, they were commingling funds. Well, if you're a small business owner, unless you're told that you should absolutely have a separate account, of course you're going to commingle funds.
Yeah,
there's so many different examples. And one of them you had brought up was the PPP loan. So we have heard of so many challenges with that. And really, other lenders are overcomplicating it.
There.
Yeah, because there's a couple different things that happen with the PPP loans. Do you want to talk about whether or not it was the prior tax year or this year?
Absolutely. So as you guys know, PPP funds were put out there to help small business owners get through the economic impact that they're experiencing. And we know that portions of those PPP funds, if not all of them, are forgivable. And so if a client has gone through that PPP forgiveness process in the 2020 tax season, if they've done that, that will actually show up as forgiven funds on their tax returns. And so they've actually made an opportunity for those funds to show up on the tax return as forgiven. Now, if we're into 2021 and they've gone through that forgiveness process in 2021, all we need to do is gather those forgiveness paperwork and make sure that has been completed. And then those are not going to have as much of an impact on how the business is running from a health standpoint as they would had they still been sitting out there.
Yep, absolutely.
And that's huge, because people think, oh my gosh, I took a PPP loan, I can no longer qualify for a mortgage. And that's just not true.
Yeah. So that's a great explanation. The other thing that's really super nice, And quite honestly, why I joined Kevnik Mortgage a year ago is I have more opportunities than I ever had in my 35 years of community banking. And one of the reasons is we have multiple loan programs, and we can help you strategize, because there are those borrowers that really just will not qualify right now for traditional financing because of those negative impacts. And it's a matter of, okay, if you still want to buy that home, if that's still a sound financial choice for you, here are some alternatives that we have. And not only do we strategize and get you into the home, but we already work now on how are we going to refinance you in the future if you want to be back into a traditional conventional product.
Right.
So those are some things that we'll work with you and your CPA, financial planner on. And it really, really does make a difference.
Yeah. We love to surround ourselves with teams of experts. So think of us as like, hey, you know, when you go to buy that house, you have your CPA who you love using. You have your financial planner who you love using. And we're one of those experts that are just going to help you so we can have a well-rounded team, because you need to run your business. You don't need to run your mortgage. And so that's really what we try to concentrate on here, is taking that pressure off of you and working with your team to make sure that we can all surround ourselves and do a great job for you.
One of the other really fun things being community-based, and we have multiple communities because we have multiple locations in different states, but we always have people with boots on the ground. And one of the really nice things is when we work with young business owners, and that could be a young entrepreneur in age, or they're just new into their business. And to be able to actually refer them to our trusted CPAs and financial planners in the community, it's a really good feeling.
It is.
You know, it's a great thing to pull those people together.
Absolutely. Absolutely. So all in all, you know, from a self-employment standpoint, yes, are the restrictions there? Absolutely. But we're here to help you guys navigate through those and make sure that everything goes as smoothly as possible, and really help you narrow down the program that's going to work for you and your business.
Perfect. And then while we've been talking, I wonder, Sarah, do we have any questions that came in?
Thank you for asking me to come back. We are getting some love out there. We're getting the thumbs up. So thank you so much. So what I want to do right now is go ahead and put the reminder up here where this is the time to answer some questions, get your questions answered. And so before we do that, we got some love here. So Leo, he writes A team right here, giving high 10. So
thanks, Leo.
thank you for tuning in, Leo. That's so great. So yes, we actually do have a question that has come in. So let's go ahead and get that question asked here. And the question is, I was denied by another lender since I used a PPP loan. I'm frustrated since they could not explain more. Do you have options for me? So who would like to take that question?
I will take that one. Absolutely. So,
Okay, great.
like we were talking about before, just the idea of having a PPP loan does not disqualify you from obtaining a mortgage. Let's be very clear about that. There are very good guidelines surrounding, okay, we cannot exclude you from mortgage qualification just because of the PPP loan. Really what we focus on is how is that handled? Where are you at in the forgiveness process? And then what direct impact did that have on your business? Is there additional income that you received during that time? Or is there additional income that you've received throughout the year that you took these PPP funds that we can use for the qualifying? Worst case scenario, again, as Kelly mentioned, we do have programs that eliminate the need for tax returns and eliminate the need for that portion of, you know, your business to be exposed, so that we can really look at what is the business doing, what is the income in the business, what have been the deductions, and how can we qualify you that way. And so it's a very important distinction. If you were denied, from what you understand, simply because of a PPP loan, it'd be our best advice to, you know, pick up the phone and give us a call, and we can help take a look at your situation and help you navigate through. Is that actually the case, or is it there were other things that were going on that we can help you overcome within the next 6 months to a year that'll help you put you in that purchasing standpoint.
And I am so glad that you mentioned a couple things about the ins and outs of the PPP loans, because as you were talking, I remembered a couple other points that we wanted to make. And thank you actually to Leo for being on, because he has a client right now that I'm helping with this exact scenario. So the other thing, the reason that we wanted to do this show now was a lot of business owners just finished their tax returns. So one of the things that we help them do, and along with their CPA and financial planner, if they have one, is we'll look at like the prior year. And we're not CPAs, so we never give, advice on how to file things, with the IRS, but we can definitely look at the prior year tax returns and say, well, you only have this much qualifying income for this reason. If you were to structure it that way, if that makes sense for you and that's, okay with your CPA, we would look at it differently. And one of the things that comes to mind, sometimes a simple change, is a small business owner may have a truck that they actually have, and it could be like an $800 payment that they don't qualify for if we charge it against them. But as long as they've been making those payments out of the bank,
out of the business account,
can document it for 12 months, then we can exclude it. So it's things like that. It's never too early to talk to us, because if you come to us a year from now saying you want to buy that house, it's too late to say, all you got to do is change which account it's coming out of. And we don't have to use it anymore. That also applies to other debt that you might have, or should you pay things off to qualify, different things like that. So the earlier that you can talk to us, the better. And it's fresh in everybody's mind right now that just filed their tax returns.
Absolutely.
Yeah. Yeah. Sarah, do you have anything else for us?
Yes, thank you for welcoming me back. We're getting love from Arizona. Hello, Kevin. Thank you. He says, great topic. And it has been a very great topic. Lots of good things to think about. And, we will have this recording available, and we're going to have the new Ask the Mortgage Guide podcast available too, to listen to the replay. So if you've been taking copious notes, you'll be able to listen to it again. But we do have another question that has come in. So, should we go for the next question here?
Absolutely.
All right. So, the question came in. I am a professional athlete that changed to coaching about 18 months ago. My bank told me that I had to wait 2 years until I could apply for a mortgage. Is that true? So, who'd like to take that question?
I'll take that one, because I actually
Okay.
had a very similar one that I closed this summer. And so one of the things, we're nodding our heads. So if we haven't told you before, we both used to underwrite.
Yes.
So the term I use, good or bad, is a recovering underwriter, because all those underwriting guidelines are still in our head. But that was, in the guidelines, it does say self-employed borrowers should be self-employed for 2 years.
Correct.
So anyone in the industry that doesn't have a lot of experience like we do really takes that verbatim. And so that bank with that particular question could have told them, no, you have to wait 2 years. That makes logical sense according to the guideline, but that's not, actually what it truly means in some circumstances. So if we have a borrower, and let's use that actual question. So he or she said they were a professional athlete. So if they turned from professional athlete into a coach, and certainly we can tie those things together for history, then it's a matter of, what did you make as an athlete? What have you made in the last 18 months as a business? And can we prove stability? And then it's continuing. And most of the time, as long as similar line of work, it can be supportive, we can do it. And in fact, I actually had one this summer where I was able to do the purchase where the local banks and credit unions did not. And that's, again, just because they took it verbatim, he hadn't been self-employed for 2 years.
And a lot of times in the same line of work, like you said, a lot of people will go from, let's say you're in IT, and then all of a sudden you become a consultant for your IT business, and you have, that 12 months as a consultant. Well, that's something that we definitely take into consideration, because it's your same line of work. You're a professional in that industry. You've shown that you can, make income, and that you can balance a business even in your first year. And that's huge for particular clients that are in that same industry, and we can help them qualify and really be able to help them navigate through that and put a strategy together to make sure that, yes, we can be successful with only 18 months of self-employment.
Yep. Absolutely. And another one along that line, especially with our, community, boots on the ground. I probably say it too much, but our boots on the ground doing what we can for our community. It's disheartening when I hear a new doctor or chiropractor or dentist in the community that's been denied financing because they switched in the last 2 years. And those are definitely professions that we can work with, either self-employed under 2 years and document a traditional product, or that's why we have those alternative products that we alluded to earlier. So we can get them into their home. They're serving our community. They deserve a house in our community. And if they go with the alternative product, we can look at refinancing them in the future if they want.
Yeah, if it makes sense for them from a financial standpoint. Yeah,
absolutely. So we have a lot of different options that a lot of people don't know about.
Yeah,
it's very exciting.
It is. We've definitely just scratched the surface on the self-employment.
We did.
The guidelines are floating through our heads like crazy. But yeah, so basically the long and the short of it is that, we are here to be experts within, with your mortgage qualifying, whether it be for self-employed or any other situation. It's just a matter of picking up the phone and giving us a call or text or carrier pigeon or whatever works for you guys to get in touch with us and make sure that, we're here to answer questions. We're here to be the resource for you, and we're here to help you navigate those situations.
Well, and for a fun little tidbit, so if you give Nikki and I a hard self-employed question, we'll be on the phone and we'll be racing
to see who can find the answer first.
It's kind of how we roll.
It is.
Sarah, do we have anything else?
Love this. This education is a cornerstone value of Kevnick Mortgage. I just absolutely love this. Lots of great information out there. We have another question that has come in, and the question is it better to have a conversation or to complete an application? So which way is it? Is it better to have a conversation or complete an application? Who would like to take that question?
I'll take that one.
Okay, great.
The answer is yes. It is better to, depending on your situation, definitely pick up the phone and give us a call to start that conversation. If you want to fill out an application and we can look at the whole situation all together, that's great as well. I mean, that'll really help us dig deep into the numbers right away and make sure that we understand the full picture. From a hypothetical standpoint, yes, definitely give us a call and ask, those pertinent questions, but we do encourage our clients to fill out that application right away. It helps us give a deep dive into their current situation. It helps us strategize to plan in the future. And it really helps us to understand where they're coming from and understand what their business is, because we look at their self-employed business in a different light than even they do on a daily basis. And so while you're busy running your business, we're here to put those numbers together and put those pieces of the puzzle together.
Yeah. And I think that's really a good point about seeing the whole picture, because one of the things that I've had happen with small business owners when they don't do the complete application is just, again, because this is not their line of work, when we go through their debts, they may actually forget to tell us that, oh, I have that $800 truck payment that's in my personal name, because, they're only thinking business. The business pays it. So that's the benefit of ending up with a complete mortgage application and pulling the credit report.
Absolutely.
But we can absolutely start either way. Good question. So is that coming from our boss man now in Arizona, sunny Arizona, where we're in this icky weather here?
Oh yes, and we do have some weather coming in, but welcome to Minnesota, right? We just had a great post, Nikki, from you. I think, how many inches of snow did we end up getting out there? What was the actual total?
Was 19.
Wow.
19 inches was the official amount. So
it's a lot of snow.
Yeah. Definitely Christmas time.
Yes, very good. Well, good. Well, as we are starting to get to the end of our program here tonight, we'll leave a couple minutes here left for people to maybe get their questions in. We will answer every question, and you can always reach out to us as well. I did put get started by visiting kevnickmortgage.com in the comments, so you can click there and click on the Let's Get Started button. So that's there. But before we get into that, what's super exciting is that this is a first in a series, right? That we're coming up with for the next Ask the Mortgage Guide. So we, of course, have talked about self-employed borrowers this evening, but the next Ask the Mortgage Guide, we actually have the next date, January 19th. We'll be back 5 p.m. Central Standard Time. We're going to have Kevin and Randy in the house, and they're going to be talking about
Woo!
retirement planning. Okay, mark your calendars, follow our social media. But here's what we're going to do. Nikki, can you give us a little bit of a sneak peek about what we'll have in that next Ask the Mortgage Guide?
Yes, absolutely. So one of the things that we do great here at Kevnick Mortgage is we help people transition from Minnesota or other states down to their retirement states. So we are licensed in California, Arizona, Texas, Florida, Georgia, all the nice retirement states that we can help people transition from. So really what we're going to be talking about is how do we work with your financial advisor to help put you in a strategic position from a mortgage standpoint to help you with that retirement planning, whether it's how much equity is in my home, and how does that help propel me forward from a retirement standpoint? Who's going to help me when I retire into one of the states that I, want to retire into? In fact, I was just reading an article the other day where the top retirement state, believe it or not, right now is Pennsylvania.
Really?
So, yep, the
I
most
did
number
not
of
know
people
that.
are retiring into Pennsylvania, believe it or not. And oh, yeah, of course, we're licensed there, so we can help you with that as well. And so it's really important for us to be able to help our clients with their transition times in their families and in their years and as they move into retirement. So really talking about how we work with your financial planner, how we can help you strategically plan for that retirement from a mortgage standpoint, and how we can help you move to that retirement place. Or if you're staying where you are, we can help with that as well.
And I think the really interesting thing that you'll learn also is, working with your financial planner, even if you have enough money to pay cash for the property, with the interest rates as low as they are, that's not necessarily in your best interest.
Exactly.
And we'll always give you the options, and Randy and Kevin will talk more about that too.
Yeah, absolutely. Very important.
All right. Boy, was that a bit of trivia about Pennsylvania? Go
Yes, isn't
Pennsylvania.
that crazy? I couldn't believe it when I read that. I was like, excuse me, what?
Now I need to
Love
go do
it.
Yeah.
That's great. Yes, and licensed there. Yes.
Yes.
Those who are tuning in from Pennsylvania, hello. We are live broadcasting on Facebook and on YouTube on our channels. And so we are broadcasting nationally. So very fun to have all of you watch this evening. And so before we wrap up for the night, what I'd like to do is hand it over back to both of you, Nikki and Kelly. Uh, any final last words for the business owners watching this tonight before we close the program? So I'm going to hand it back to you guys. Final thoughts, and we'll get everything wrapped up for this evening. Who would like to start?
I'll just go real quick and then Nikki can wrap it up. It's just, please don't make any assumptions. We have the expertise to help you navigate through it, and it's never too early. I'm working with, besides Leo's client, I'm working with a handful of other clients that are actually just, they've had a couple tough years. One is a relatively new business owner, and another is one that changed their structure from a Schedule C sole proprietor to an S corp.
Mm-hmm.
So, and we're working with them early to get them prepared and so that they can get things in line. So it's never too early to call us.
Yep. And I absolutely agree. Give us a call. We're here to help. We're here to be a resource, not only for you, but a resource in the community, and to help you navigate not only the mortgage side, but help connect you with those in the community that can help your business as well. So thank you everyone for joining us as well. We want to say thank you because we love doing these Ask the Mortgage Guides, and it's always great to see people logging on and asking their questions. That's what we're here for.
Education piece again, cornerstone, Kevnick Mortgage. I love that. So thank you so much for both of you to be on here tonight. Thank you for all the viewers and everybody who has tuned in and will watch this on the replay, right? Because this will be available on YouTube, on Facebook, and our new podcast and our podcast channel. We're so excited about that. So you can listen to this audio of this. So we're very excited about it. So.
Yes.
Make sure to take a listen and to like that as well. So I'm going to go ahead and put our thank you slide up here that has the email address too. You can always reach out to us that way. But again, thank you so much for viewing tonight. If you are going to listen to this on the replay, we appreciate your time. If there are other topics, right? Nikki,
Yes.
any topics? email us, right? Reach out to us on
Absolutely.
social media. I think that is a wonderful way for us to put some great programming together because this series, right, Kelly, we were talking about this, and Nikki, this was a request from some of the partners and viewers that we have out there. So
Absolutely.
this program is for you guys. So thank you so much. And so we will be signing off here from the Prior Lake office of Kavnik Mortgage. So thank you
Our
very much.
city.
Yes. And until next time, we look forward to positively changing your home finance experience. Take care.
Bye, everyone.
Bye.